Welcome back, everybody. Sive Morten is here with the Forex Peace Army.com. Let's take a look again on the euro currency. So a lot of interesting stuff is going on here. Yesterday we talked about two different patterns and have specified the particular levels that we should keep an eye on to understand in what direction the market should follow. So if you remember, this was a butterfly pattern on the fall time frame chart and the small local hand shoulders on the hourly chart. To start dealing with the butterfly, market has to break some support levels, which hasn't happened. And currently we see that the market is following with the hourly hand shoulders pattern. But in general, situations don't not as simple as it looks like. So on a daily chart, you could see that overall context and trend remains bearish. So we see that the MACD shows the bearish direction. So by now, this action we should treat just as a retracement of the downward action. Besides, price is coming closer to the point of the break-even trend price. So we have to be careful and watch for possible bearish grabbers. Why we will need it, I will show you a bit later on the lower time frames. You will understand the all really interesting, intriguing combination that we see here. So that's what we have to keep an eye on daily. Now, dropping lower on a fall time frame chart, to make a decision on the long entry, and in general how we could suggest that market is turning up and will continue upward action on a bigger scale, on the daily chart, on the weekly chart maybe, I would keep an eye on the possible hand shoulders here. So first, market has to reach the 118, 118.30, 118.13 area here, where its neckline stands. And here we could consider a couple of trades. First trade that we could keep an eye on a possible short-term bearish position here, just for a forming of the right arm. Second is potential long entry on the bottom of the right arm for possible increasing the success of the market on the bullish side. And here the potential bearish grabber on the daily comes in the game, because when the market will reach this level, if we will get the grabber here on the daily chart, it would suggest that market should drop below the lows. So that will be the direct hazard of the possible failure of this big head and shoulders pattern. This is the first combination that we need to keep an eye on. It's a bit tricky, but just keep an eye on the both time frames and see how they combine to each other. If we will not get any grabber on the daily chart, that's great. So potentially we could get clear head and shoulders, which maybe will work. We will see. But this is definitely the pattern to watch for, because it could generate a few interesting trades in both directions, because it's rather big, at least for the 4 time frame scale, and might be interesting. Now, moving lower to the hourly chart, you could see that hand shoulders that we have specified recently starts working. So market has broken for the confluence that we have specified. We haven't got clear ABCD pattern to the downside that we discussed, but still some response and ping pong action around this level, and some kind of the whipsaw action has happened. So this indicates short-term bullish sentiment, that market was able to break the confluence and just keep going. Now you can see here some acceleration starts. Market is coming to the first COP target, 1775. But this is not very important to us, because we are mostly interested with this next major target, with the OP, with this ABCD pattern. Actually, this is the hand shoulders target. It agrees with the 1830 predefined resistance, where theoretically stands the neckline of this pattern, right? So these minor hand shoulders should lead us directly to the bigger hand shoulders. So that's the idea. So if somehow you have taken position here, that's great. So you could keep it. That's the next target. On the bearish side, what to keep an eye on here? What signs could tell us that something is wrong with this bullish pattern? If you will see that market will stop at the COP, it's actually showing some reaction already on it, and suddenly drop below the neckline, return back down, forming some bearish reversal candle here, that will be bad. And it will tell us that this pattern is failing, and we should be ready for a drop lower below the A point. So market should not do this if it normally bullish. So That's the thing to control. Right from this minor target, market should not, at least from the bullish point of view, it should not drop below the neckline, return back to this consolidation. It should keep going higher. Yes, we could get some consolidation here, maybe some minor retracement, it's okay. But we do not need to see, we do not want to see any significant downside performance. It should keep going to the OP. Once the OP will be met, we will decide whether it makes sense to take scalp short position here or not. Maybe we will exclude this moment. And we'll start watching for this possible pattern. That's potentially might be as a great signal for possible taking long position, as it later may become a very great signal if it starts failing. These hand shoulders could generate, as I said, lots of different trading setups, but initially we base our view that this is classical pattern, and we count that it will work as it should. If it will not, then we will adjust our view and change the trading plan. That and towards what we have currently on euro currency, as you can see, lots of different trading setups are forming. So it's definitely a lot of things to watch for. And the nearest one is, of course, the grabber on the daily chart and how market will perform up to the 118 area. So that's the first stage. It's probably all for now. See you tomorrow.